Good day everyone. I'm Ivan, the moderator for this webinar. I welcome everyone to today's webinar, which is HOTMA 2025 Compliance Guide, Key Updates for HUD Multifamily Properties. I want to introduce our presenter for today, Rhonda McCon. Rhonda McCon is a seasoned affordable housing professional with over 20 years of experience in the industry. Currently, she serves as a director of affordable housing for a non-profit organization covering 4 states. I would now like to hand over the floor to the speaker. Over to you, Rhonda.
Thank you so much. Again, my name is Randa. Thanks for joining me. I know that we're starting just a few minutes behind, so I'll do my best to make up a few minutes so that your valuable time is given to you as requested, and I'll try to cover this in as much as I can. Just as a reminder, HOTMA was passed by Congress in 2016. It went through some rulemaking processes, and the sections that we are going to talk about that affect HUD multifamily programs are going to be in sections 102 and 104, and full implementation right now is scheduled for January 1st of 2026. Today we're going to focus on the majority of information that is in the what's called the implementation notice. The most recent version is Notice 2310. It was released back in 2023. Inside HUD Notice 2310, it has a bunch of stuff, right? And then attached to that bunches of stuff, and we're only talking about things that are changing. HOTMA makes changes to the Code of Federal Regulations 24, and there's different parts of the Chapter 24 of the Code of Federal Regulations. I've listed a bunch of them here for you. We're going to focus mostly on Part 5, which is General HUD Program Requirements and Waivers, and HOTMA is changing a lot. Like a lot. This is just a few things. The list on your screen is just a few things. We also gained some new terminology under HOTMA. So when it comes to income, when HOTMA goes into effect, they have made some changes. It's called streamlining rule. Safe harbor means of verifying income. It's also called a means tested source, de minimis errors. The 9887 and 9887A, these are the consent forms that we use to be able to run EIV and gather verification. The other thing to remember here is that we are now going to be making it known to the tenants that they have the right to revoke this consent. The other thing HOTMA is changing is with regards to verification and the usage of Social Security numbers. HOTMA is also changing verification, what they call the verification hierarchy. There's a list of things that HOTMA is going to adjust annually for inflation, for income exclusions. Remember when I said at the beginning, if it's not specifically excluded from income? The other thing that HOTMA does is it gives us some better definitions. It also gives us a better definition of this non-recurring work. The other win with HOTMA is that they have given us a very specific definition of what is a gift. HOTMA also changes how we're going to handle trusts, personal property, and classify personal property as necessary or non-necessary. For EIV, things that are changing, the income detail report, the household composition is going to be changing under HOTMA, specifically as it relates to foster children and foster adults. I want to spend a few minutes talking about these asset limits and net family assets. So when HOTMA goes into effect, Project-Based Section 8, including PBRA RAD 2028, but not 202 PRAC properties, will now have to look at the amount of assets that a particular household. So what's the real property rule? It's defined by each state law. Asset limits for your current tenants. HOTMA also establishes new things that are no longer going to be looked at or counted as assets. Total asset income is calculated differently now. I do recommend that you itemize your assets. So HOTMA now calls medical expenses health and medical care expenses. They also revise the definition. A deduction versus an exemption. Hardship exemptions. New regulations are changing that threshold for medical deductions from 3% to 10%. How it works is, this is just a recap, but in the interest of time, I'm just going to not recap for you. Make sure that you have policies about that. With regards to students, it's not changing whether they are Title IV of HEA or not. Earned income of students is still capped at the dependent deduction amount. Woo, I'm over time already. Interims. This is where distinguishing between decreases and increases of income. For increases, you have a 10% threshold, no matter what. Don't get to choose a different threshold. Then you can decline to conduct the interim. HOTMA changes when interims are retroactively effective for both increases and decreases. And here's a list of what you need policies for when it comes to interims. And then there's still that's just not released yet. We're still waiting for HUD to give us so much stuff. As you generate those questions, get answers to them before HOTMA goes into effect so that you are fully prepared for when HOTMA goes into effect. I just want to say thank you so much. I hope that you're able to come back and we'll do some more detailed trainings to dive into. My name is Randa. Thanks for joining me. I just appreciate everyone being here. I do hope that you found it useful.
Thank you, Randa. That concludes the session for today. And thank you everyone for participating. You may all disconnect now and may you have a great day ahead.